What's good, everyone? It's Nick D back with another video. On this video, I'm going to be taking you guys through how I'm actually going to pass a $100,000 evaluation with Breakout. So I've just purchased this challenge, and what I want to do is actually show you guys every single trade that it takes me live, break down every single trade, show you what it takes to actually pass an $100,000 evaluation, and then actually show you the steps that I would take to make a payout on the $100,000 account. So basically, guys, we're going to jump into the market. It is 9 a.m. in the morning here in Sydney. Went to train, got a coffee with my friend, and now I am back on the market. So I'm going to break down my thoughts on the market. I've only just had a brief look, but let's just have a look. So on the 4-hour time frame, one thing you can see is that the market is obviously extremely premium, right? Now, there's a few things standing out to me. Number one is we've got this like resistance level here, where a lot of retail traders, a lot of average traders will be looking in the market thinking, you know what, I should go short here because there is a resistance level. This is what a lot of the market think, okay? So they look at this and they're like, oh, surely the market's gonna stop going higher here. We're gonna get input from the bears and they're gonna push prices lower. Now, in my opinion, I start thinking to do the opposite, and I try to build an idea or a case and build evidence around why I should do the opposite of what the majority are doing. So if I look at the market, yes, we are extremely premium. Like if we look at this leg of price and we look at that as the low and then we look at this as the high, like if I pull a fib from the low to the high, we're extremely premium. We're above the 50% level, meaning that, you know, typically a good trade entry when you're going long would be the 61.8 or the 70% retracement, right? These are basically your optimal trade entries. But what I'm seeing here is a little bit different, right? I'm basing this trade a little bit more off liquidity. You know, where do I think the market will go and then fall to? So just to show you guys like the nature of what I'm looking at, I've seen this happen time and time again where the market will build this sort of price segment, and what we will see is we'll see prices come down a little bit, shoot up higher, take these stop losses out. So there is liquidity sitting above these highs, because I want you to think about this. When you go short in the market, right, let's just say you take a sell, okay, so you're selling BTC at this price and you're wanting prices to go lower. You're obviously going to have your stop losses above price, okay? And when you're short, so when you're actually betting that the market's going to go lower, your stop loss is actually a buy back to the market, right? Because if you're selling something and it goes the opposite direction, you need to buy that back to cancel out the position, right? So you're actually buy side liquidity. Does that make sense? So what I'm actually seeing here is I want to see a hunt for buy side liquidity and then a drop lower to take out this low, okay? And I'm going to explain the reason around that. If I show you guys a little bit about the liquidity here, okay? So if we can have a look at the market, we can see that there is a lot more liquidity to the upside of price, okay, than the downside of price. There would be a lot more pain caused in the market for people who are going short here, okay? So you can see there's about $35 million worth of liquidity sitting above these highs, okay? So the way that I look at this is what would cause more pain in the market? I believe going higher first and then dropping, so sweeping this high, okay, faking the market out the other way, and then coming down to collect this and then building some sort of fractal nature higher, okay? But, you know, a lot of the market right now, I do believe, is going short here, because what we've had as well, is we've had a break of structure to the downside, and it looks like we're forming a lower high. So most people would be actually stacking in short on this candle here, this bearish candle, and I'm going to show you guys the thoughts on what I'm going to do. So on a 15-minute time frame, we can see that price has already made a higher high internally. So if we look at price here, we've got high, higher low, higher high, higher low, higher high, because we broke this high here. Okay, now we're starting to make some sort of higher low. Now, a lot of people are looking at the 1 hour, 2 hour, 4 hour, and they're like, this looks extremely bearish. And I agree with them. It does look bearish, but I'm trading based on liquidity concepts. I'm not trading based purely on market structure. While that is the most important thing, you don't take every trade in line with the trend, okay? Like that's just not how you trade. So if I show you guys here, I'm actually interested in getting long, okay? Because what I want to do is I want to see the market come higher. Like I said, take out these equal highs here where people are going short and then come lower. So I'm basically going to have my stop loss. This is basically the trade setup, okay? So if we go 1 hour time frame, okay, I'm going to take a long here now, okay? And let's just say I'm going to put my stop loss if I put it below this low, I'm not getting the reward I need. Okay, it's not worth me taking the trade, because let's just say my take profit, let's just say this is the major high that I want taken out. Let's just say my take profit's here. I'm only getting a 1.6 to 1. But if I tighten this stop loss and I use like a 15-minute time frame to come up with this, right? So if I put my stop just below this low here, okay, and we go back to the 1 hour time frame, you're going to see my stop, my risk to reward is now 2.86. If I tighten this a little bit, I can get 3 to 1, but I'm going to give it a little bit of room, right? I would rather my stop loss be safe from something like this, okay, than me trying to get more reward out of the market, okay? So I don't want to trade my P&L, I just want to trade price. So I know there's going to be stops above this level here, and I know that if we do get a run, that's going to act like rocket fuel to push prices higher. This is the way that I look at the market, okay? So let's just say there's stops above here. I'm going to get involved here long. My stop loss is $796. I can actually tighten that up a little bit. We'll just go to 700, okay? And I'm going to try catch an entry. I want to see the market pull back a little bit. Okay. So my entry would be 49,105. My stop loss is $700, right? So basically this is how you're going to work out your position size. Let's just say your entry is here, okay? And this is your stop loss. Basically what we need to calculate is how many dollars, what's the distance in dollar value between my entry and my stop loss. So you can see here it's $702. So basically what we need to do is we need to figure out, if I want to risk $2,000, so if I've got a $100,000 trading account, okay, which I do on this evaluation, and I want to risk 2%, that means I'm willing to risk $2,000, okay, on that account. Now this is a little bit more of an aggressive trade, like $2,000 of risk is almost half the daily drawdown that is required. So I would fail this account if I lose more than 4% in one day. Okay, so I'm going to take half the risk for the day, and then if I lose this trade, I'll probably just sit out till tomorrow. Okay, and this is how I usually take the $100,000 evaluations. I'll find a setup like this that looks really good to me, and I'll take a more aggressive trade at the start, because basically the goal here, guys, the goal for me is to actually build trade buffer. So if I'm starting at 100,000, right, my goal is to get this account into profit, right? So I'm building a trade buffer, okay? Now this means that my max drawdown on this account is $94,000, okay? So if I build this equity up to 105,000, for example, I've now gained $5,000 more buffer. All I need to do now, once I build that trade buffer, is actually stay in line with the 4% max daily loss, and I'll be able to pass this challenge, okay? So the main thing when you're starting a challenge is you want to build trade buffer. You want to get into the green. What that's going to do is it's going to allow you to build momentum on that win and actually give you some buffer to play with, okay? Instead of going straight into drawdown straight away, which is a risk at times, you're going to have to claw back from drawdown, which is always pretty hard, okay? So basically the first thing I'm going to do is we're going to go back to this trade. Okay, so that's basically the setup. So I'm going to be risking $2,000. If I've got a $700 stop loss, I go $2,000 divided by 700. 2.85 BTC is my trade size. So if we buy this now, so we're going to go 2.85. We're going to do it at market, and we're going to put a stop loss in for 93,399. 93,399. We'll just go 380, 370, 2,200. Let me go 39, 2,100. So I'll have to change the size because I can see here my projected loss is a little bit higher. So if I go 2.7, 2.5, I'll go 2.5. So we're in this trade right now. Okay, so we're actually long right now on this live position. So now what we want to see is, my goal for this trade is to see it chop around a little bit and then come higher and take out this buy side liquidity here. And then after that, I do believe we should see a sell-off to target these lows and also this major low here. So that's the medium term play, but I do think today over the next 24 hours, we are going to see a move above these equal highs here. So I'll keep you updated with the trade, guys, but that's it. So I've got 2.5 BTC long. I'm up $74 right now. So yeah, I'll check back in with you guys very soon. All right, squad, we're back. 12:22 p.m., midday. We're up $1,800 on this trade. So you can see it's it's gone the direction I wanted it to. This is a very good sign, right? So as you guys know, I entered here at market, so I did cop some pretty large fees actually. So because I entered another 1 BTC at market on a separate order, I basically doubled up on the fees. So that's a mistake on my end. But I wanted to get into the market because I knew it would have some sort of move like this, right? So basically, guys, the trigger is now completed. The trigger is essentially what allows me to feel more confident in the trade. Now I need to looking for an exit, right? So let's just say, for example, I didn't get this move and price was just sort of fluttering around here. Then I could close that position because it didn't do what I instantly wanted it to do, right? So I didn't see the trigger. Like let's just say I didn't see the trigger, then I wouldn't have been confident to stay in the trade. But now that I've got that trigger that allows me to be confident in this entry here that I did, I can actually start looking for the next, I guess, evidence that will allow me to be like, yeah, I'm taking profit, right? So this is a really good sign. One thing that is a little bit concerning is we could construe this as a bit of a supply level here. So I'm just going to see how price acts within this candle here, because that's basically the last push where people who were going long here, so people who were buying at this candle, they were obviously trapped, right? But the reason they're trapped is because look at the candle that followed it. So they either got stopped out of their positions or they're still holding. So there's a few things that could have happened here. Because we had this break of structure, this could be looked at as a supply level in the market. So I'm just going to keep my eye on this, but I do think it'll do something like this. I think we'll get a massive push up above these highs. That's what I'm thinking, right? And this is 12:24 p.m., currently up $1,800 US. So yeah, after the fees, we're in profit $1,400. So the account equity is at $101,401. So we're looking good. We're looking really good. So I'll keep you guys updated in the next few hours. All right, team, we're back. It is now 3:17 p.m., so this is a few hours later. We're up $2,400 now, and we're actually starting to start getting into this level. Now, remember how I said that this could be an area where price starts sort of just like ranging and maybe getting defended? We've already had that on a smaller time frame. So if you look at the 15-minute, we came into it, we had a little bit of a rejection. So this is a really good sign that we've held on this high here. So it's pretty good little flip zone just before this level. I do want to see this high broken. This is basically the next trigger that I need to see to be really confident to hold this trade. Because look, to be honest with you, like 2,400 on the first trade of this account, I guess the safe way would be for me to close this trade and take 1R, which means 1 times my risk. Because remember how I'm risking $2,000? If I take the trade right now at 2,400 or 2,300, I'll be up 1R. So this is what we call it in trading. 1R means 1 times what I'm risking. It's not a great trade if I close it at 1R. Typically what I want to do is aim for 3R, 2R, 2.5R. Okay, because if you consistently take profit at 1R, then when you take one loss, you're back at break even. So basically what you want to do is you want to have your reward expectancy a lot higher than the risk that you're taking, okay? So this is a live market right now. I'm pretty confident in just holding it for a little bit. The hourly looks really, really strong. We should see a little bit of a push, maybe a little bit more of a range, and then a larger push higher. That's what I'm expecting. So I will check back in with you guys really soon, but I'm just going to... Oh, no. I just deleted everything off the chart. Dirty drawings. All right. So what I'm going to do is I'm going to check in with you guys a little bit later, and we're going to see how this trade plays out. So this is the main level that we're looking at now. I will check back in with you soon and show you guys how it's all going. All right, crew. We're back. 7:26 p.m. The trade is flying. So we got exactly what we looked for. Remember how I said it was going to come up, have a little bit of a pullback inside the level, and then I wanted to see a move above this high. So this is a very good sign. We're currently up 3,600. So our equity right now is 103,249. So this trade's good, right? So we're a little bit above 1.5 R now. If we get the move that I'm looking for, which is, remember, a sweep above these and then a push above this high here, that's pretty much what I'm looking for. Look at the 4 hour now. This looks bullish, okay? We got a solid entry on this. Oops. Look at the entry we got, okay? And this looks like it's just getting started, to be honest. I knew most of the market would be looking short around this swing high here, okay? And when they got that move, they would have started heavily getting into the trade. Sorry, getting into the trade heavily. And then that's when you know it's a really good time to buy. Okay, when you want to take a counter trend of the internal structure here, that's when you know, especially when there's liquidity like this above price, it acts like a magnet. Okay, so it acts like there's a reason for price to go higher. Like I said, I do think in intermediate term, we're going to do something like this, and then lower, and then like that. Okay, but like we're not here to predict that far away. We're here to predict what's going to happen over the next 12, 24 hours, right? It's not necessarily like where's Bitcoin going to be in 3 weeks? That's not what trading is. What we're basically doing is we're using current price, okay, and previous price, okay, to make a decision where we think price will go in the short term, okay? And that's as simple as I can put it. So ultimately, I'll keep you updated, but yeah, we're in a really good position here, 3,700 US. Let's do it. All right, crew, 8 p.m. at night. Look what we are looking at. This is beautiful. So this is exactly, sorry, my girlfriend's cooking in the back here. So basically this is exactly what I wanted to happen. This is exactly what we planned to happen. And this is essentially going to start, like, see how when I said there was stop losses above price, look at how much velocity in this break we're getting. It's because of the liquidity sitting above these highs. Like I mentioned very early on, we're going to get a high velocity move once we actually take this. Look at price, right? Like if we actually zoom in and watch price, it's going to be super. Look at it. It's just moving very quickly. So this is what you want to see when you're looking for a move above liquidity. I'm going to start taking profit now. I'm going to start getting out of this trade. Now the reason is because the liquidity is taken, so we could see something like this, right? So we're going to take this $7,000 in profit. We're going to cancel both trades at market. Sorry, my thing's a little bit. So this one's closed, this one's closed, and we are left with $6,500 in profit. So we are literally, guys, look at that, look at that. I don't want to get too greedy with it. You might be wondering, why don't you just like move your stop loss to break even, or why don't you move your stop loss into like 2-hour profit or something like that? It's because this is an evaluation. The goal of this challenge is to get funded, right? When I'm funded, I can start being a little bit more, I guess, greedy with things, but the goal of this is to take profit and get to the next stage, right? So that was a live scenario of me actually doing it. $106,575, sorry. So we are literally 6.5% in profit, okay? This is after trading fees, spreads, everything like that. So we literally have 3.5% left before we are funded on this account. And you'll see here, it probably will go to the full take profit, but I just want to lock things in. I'd hate to see a wick down and then losing on this opportunity, right? And one thing I will teach you guys now, a little bit more of an advanced concept, but it's called evolving R, or evolving risk to reward. Okay, so I've entered price here, okay, and price has moved all the way up here where I took profit. Why would I risk all of this to make this? Okay, can you understand that? Why would I risk $6,500 in profit to make an extra $1,000? Okay, I am risking far more than the potential reward. And this is a very advanced concept that we will get into a little bit later in the channel. But yeah, I'm going to upload this video for you guys now, and you guys can check that out.